Hello traders, welcome back to GolgiFx, and this is your boy Golgi. So today we'll be looking at technical analysis. So I'll be breaking down all the tools beginners and traders looking to learn technical analysis have to take very important note of. So most of these things you will see are the basic things that every trader, even the top traders, use to analyze the market. So traders, if you are new to our channel, please like this video and subscribe to our channel to be notified on the coming videos. Traders, let's get into the video. So before we start, I want us to talk about the three types of analysis that we have in Forex. It is the technical analysis, the fundamental analysis, and the sentiment analysis. So all these analyses are very important, and it is important for beginner traders to get some knowledge about these three types of analysis. So in my coming videos too, I'll be breaking down the fundamental analysis and the sentiment analysis. So let's look at what is technical analysis. So technical analysis is a range of techniques used to try and forecast future price movement of the financial market based on historical price movement and pattern. So basically that's what we do. So the forex markets are particularly well suited when using technical analysis in the development and execution of short-term and long-term trading strategy. So with technical analysis, we use pattern and historical price movement to analyze price. So we'll be looking at some of the patterns in the process of analyzing the financial market. Let's continue. At the end of the video, you should be able to understand the most important indicators used in technical analysis. You should be able to know if technical analysis really works. So before we dive more into technical analysis, let's look at the trading chart. The trading chart is the first thing that every new trader or any person who wants to trade get into contact with. So we want to understand what the trading chart is. So we can see that a chart or the price chart that we see happens to be the first tool that every trader using technical analysis need to learn. So before you be able to understand the price movement, the patterns, and some of the things that we use, you should be able to understand what the chart is. So you can see that this chart help us to deplete changes in supply and demand. So the chart blend all the activities for millions of market participants, whether they are human or algos, because in trading we have people who use algorithmic or bots to trade. So we are not only trading or analyzing the market and also participating in the market with only human beings. You are trading with algorithms. So if that is the case, let's understand the trading chart. So the trading chart display information that can help you to decide when to enter or exit a position. So these trading charts are very important, and like we said, it's the first thing that every trader will see when trying to understand or to analyze the market. So there are different types of trading charts whereby we can look at them. Some of these charts are the bar chart, the line chart, the point and figure chart, the market profile, and the candlesticks. So all these are trading charts that traders use to analyze the financial market. But most of the popularly used charts in our current time is the line chart, the bar chart, and the candlestick. So you'll be focusing on these three, and we try to explain these three as we move on. So let's look at the first one, which is the line chart. And this line chart helps us to see the opening price of where the participants got into the market and where the closing price, that's where they also exit the market. So the line chart helps us with this. And the line chart is one of the most popular used and is very important when you are looking at the big picture of the market. So if you want to see the general price movement of price, then you can use the line chart and it will help you to identify that. Let's look at the next one, which is the bar chart. The bar chart is a little more complex and it shows the opening the closing price, as well as the highs and lows. The bar chart helps traders to see price ranges of each period. So if you look at the picture that we are seeing on our screen, if you look at this one, you can see we have the low, the opening, and the high and the close. So we can see that the market opened at this level. That's when the band setting, it rise up to form the high and the close here. And before it's open, you can see it went down to form the low here. So the bar chart help us to understand all these things and help us to see where price open, where is the closing price, and the most important thing is it help us to see the price range of each period. So that's the most important thing you have to know about the bar chart. So let's continue to see the next one, which is the candlestick. The candlestick is the most popular of all the charts and is mostly used by all traders. The reason being is so it provides traders with more information, also help us to easily view the chart with understanding everything that is happening on the chart. So it's very important to look at a candlestick. So like we can see, a candlestick is a combination of the line chart and the bar graph, so which makes this candlestick very important and very powerful. So we can see, similar to the bar chart, we can see that one we had the opening, the high, and the close. And this one you can see the starting price. If you look at the green candle, we have the starting price, we have the market high, the market low, and the closing price. So these are the two types of candlestick that you mostly see, which is the green and the red. Some brokers use different colors, but you can see the red mostly form when the price is in the downtrend, and we see the green when the price is pushing up. So as a trader, you can change the chart type depending on the preferred view, but most traders prefer the candlestick because it always gives us 4 key pieces of information, which is the hot, the market high, the starting price, the ending price, and the low, which is very, very important. So as we are talking about candlestick, we have different types of candlestick which can form on our chart. We will not only see the two red and green candlestick like we saw on our chart. We can see different types of candlestick on our screen now. You can see we have pin bar, an indecision, and a lot of candlesticks, and all these candlesticks have names and they have meaning. So it is very important to understand all these ones, and it's also good to be able to see them and to interpret them. Now let's look at some of the importance of using these candlesticks. One of the importance of using this candlestick is it is easy to interpret. Yes, it is very easy to interpret, and they are a good place for beginners to start figuring out the chart analysis. Chart analysis can be a bit complicated for new traders, but with understanding of the candlestick, it will help you to easily interpret price. So let's look at the next one, which is candlesticks are very easy to use. So when we're able to understand candlesticks and your eyes are able to adapt to this information, it makes studying the chart very easy, and it helps you in your trading as well. So let's look at the next one too, which is candlestick and candlestick patterns have cool names such as the shooting star, which helps you to remember what the pattern and what it means. So anytime you see a pattern like indecision, shooting star, pin bar, these names help you to understand what is happening at some key levels on the chart, and they are very important for you to know. So it's always very important to understand all these candlesticks. So I'll pop up a video up there where you can see candlesticks, a full meaning of all these candlesticks, and to understand them very well so that you can get there and learn. Let's continue. The next one that I want to talk about is the market structure. So the market structure is also one key thing in technical analysis, and most people refer to it as price action. So mostly we refer to the study of market structure because of how the market moves. So anytime we talk about market and the structure, like we understand how the market moves, the structure of the market. So understanding the trend and anticipating the moves in the financial market is all used with the help of market structure. So the market structure helps us to see all these things, and with this we'll be able to make correct or good decisions in the market. So let's look at the definition of the market structure, which is it is a simple and a basic form of understanding how market moves. So like we said, it is very important, and to be able to become a very good technical analyst, you should be able to understand how price move, which is the structures that price form. So let's look at some of the different types of market structure that we have, which is the type of market structure. If you look at the market trend, we have three different directions that the market moves, which is the bull trend, the bear trend, and the sideways trend. So the market will always be in these three moves. Either it is pushing up, the structure is pushing up, it is pushing down, or it is in a consolidation mode. So these are three things that you should take note and always look at when trading, because you can never trade without looking at the structure as a technical analyst. So if you look at here, you can see these are the three pictures of the structures that we talk about, which is the trend. If you look at the first one, you can see the bull trend, whereby the market meets higher high, higher low, higher high, higher low, higher high. Whereby we have the bear trend, whereby the market also move in the downside. And like we said, the consolidation one too, whereby the market move in a sideways. So these are the three important things that you should know when it comes to market structure and market trend. Let's continue and look at this in real price movement. So if you look at our chart here, you can see this is the candlestick that we talked about, and you can see within this candlesticks, it has formed a structure whereby the market is moving in the downside. You can see making lower high, lower high, lower high, lower high. And if you go back, you can see, so if you look at this, you can see this is what I was talking about, which is market making lower high, lower high, lower high. So as we can see, candlesticks help us to identify the price, the high, the low, and the market structure also help us to know the direction whereby the market is going. So as you can see in this trade, you can see the market was going down, and when it got here, it started consolidating, and we can see there has been a trend change whereby the trade was placed here for a buy, and the market keep pushing to the upside. So it's very important for traders to understand the market structure. Let's look at the stages of a forex trend. So a trend is a tendency for price to move in a particular direction over a period. So the trend can be a long-term trend, a short-term trend, an uptrend, a downtrend, or even a sideways trend. So these are the stages that the trend go, and we always have to take note of the trend of the market. The market can be in a full uptrend, it can be in a full downtrend, or it can be in a long-term uptrend or a short-term downtrend. So our success with forex trading investment is tied to the traders' ability to identify the trend and position themselves profitably. To identify the trend and position, for them to position themselves to be able to trade profitably. So the bull trend, like we said, which is the uptrend, help us to see price when it is moving higher. And this trend continues in a longer term, whereby we term it to be a long term. When this uptrend continues for a shorter time, we say it is a short-term uptrend. So these are some of the key things you should know. And also the same when we come to a downtrend, when we are in a downtrend and the market is making lower lows, like you saw here, see markets making lower lows, and if this thing happens in a very short term, then we can see it's a very short-term downtrend. And we can also have a long-term downtrend. So these are some of the key things that traders have to take note of it. So let's look at the next chart, which will help us to understand the forex trend value. So if you look at this, you can see there's a line here which identifies the trend that we are in. You can see we are in overall long-term downtrend. Why? Because you can see the market has been continuing making lower lows in a very long term, and within this lower low, you can see a short-term uptrend being formed. Around this point, we have a short-term uptrend here, a short-term uptrend here, a short-term uptrend. So as you can see, the overall trend is in a downtrend, which means the overall market is pushing to the downside. But we can have short-term uptrend, and also we can have long-term uptrends inside a trend. So these are very important key things, and you should always be able to identify them. As a good trader, if you want to become profitable, we should always understand the overall trend. You have to know that the overall trend is in a downtrend, so you always trade in that direction of the market. Let's continue and look at support and resistance, which is another key important thing in trading the financial market. Support and resistance levels are important points in time where we focus on supply and demand, where these levels meet. So these support and resistance levels are seen in technical analysis, and they are one of the most important things that will help you to even identify the psychological level and also the supply and demand levels of price. Let's go and look at what support is. So support is a level at which demand is stronger enough to stop price from falling any further. So if you look at our chart below here, you can see that this is our bar chart nicely drawn, and we can see around this level, which is the green line that we are seeing. You can see anytime the market gets there, it finds it hard to break. Anytime the market gets there, it pushes to the upside, gets there, push to the upside. So these are levels, they are very strong demand levels where there is enough demand to push price to the upside. So it's always important to understand this support level and to be able to identify this support level as you are trading. Let's look at the next one, which is resistance. So resistance too is the level at which supply is stronger enough to stop the price from moving higher. So if you look at this red line on our chart, you can see that with this one too, anytime this bar chart gets there, price tend to move down. Anytime price get there, tend to move down. So this tend to be our very strong resistance level on our chart. So we can identify support and resistance level on our chart. Any currency pair, any stock, anything that you are trying to trade, you'll be able to identify levels where demand tends to be strong enough to push the market up, or supplies tend to take over the market. These are the two important things when it comes to trading psychology, or levels where there will be strong price movement. So it's very important for new traders to take this support and resistance, also very important, and to be able to identify them, which is the most important thing, to identify them as price moves. You can see I have this small chart here, and it says a breakout of a structure of support or resistance will lead to price movement in the next area of support and resistance. So if you look at this, if you use this to represent our line chart, you can see that as we saw here, this was our very strong support where price got there, it feels, but later price broke and then it turned out to become our resistance. You can see this time this level has broken this level on our chart, and now we have seen a new support being formed here. So price moves within the structure of your support and resistance. If this level also breaks, then our green level down there, which is this level, will become our resistance when price breaks to the downside. So traders, these are some of the key important things we should take note of as a beginner trader or as a developing technical analysis trader. So traders, if you want to understand more about this market structure, the resistance and support, and all the key things that we use in technical analysis, you can check out the single videos we have on all these things, and to be able to get more knowledge on this. So traders, this is where I'll end the video. I hope you like it. Please like and subscribe to our channel, and see you in the next video.